Greetings everyone. In this video we'll be going through Chapter 10, some of the basic concepts and principles, and I'll be covering just some of the PowerPoints. I always invite you to review all the PowerPoints as well as read the chapter and study the videos and other resources that are provided for you in Blackboard. Well, in Chapter 10 we're going to be talking about payroll taxes. This chapter will be of particular interest to those who decide to go into payroll accounting. It will also, though, be interesting to people who receive paychecks or any kind of compensation from either an employer or a client, because the impact of the tax code on our payroll, on our withholding, affects our everyday lives, even in retirement. While we don't receive necessarily payroll, we do receive income. And these kinds of taxes come into play there too. So let's talk a little bit about the first learning objective, and that is that a payroll has a relationship with Form 1040, our primary individual tax form, and we will withhold taxes from our employees, for example, and we're required to do that because we have a pay-as-you-go system. So throughout the year, as employees earn wages and salaries, they will have a certain amount withheld for federal income taxes and other purposes as well, but our scope here is for income taxes. And then there's a point of reconciliation. That is to say, we're going to find out, did we pay enough to the government based on our income withholding and other considerations, or do we have to pay in, or might have we overpaid and get a refund? This reconciliation process occurs when we file our tax return. So we'll need some information then from our employer to see how much was withheld, and we get a W-2 for that purpose. The withholding taxes, when we select a certain number of withholding allowances, for example, on Form W-4, is only an estimate, an approximation of what we think will owe the federal government. Interestingly, many of us believe that getting a refund is actually a good thing. We look forward to getting refunds. But actually, getting a refund is a negative outcome. It's actually undesirable to get a refund for the following reasons. When we get a refund, we have given the federal government an interest-free loan for the year. And so they'll return the money to us. They've had use of it all year. Then they'll return it to us in the form of a refund. But they won't give us any interest on it. We're just getting the money back that was always ours. Had we had that money available to us all year long, then we could have earned interest on it. We could have invested it or used it for other purposes. So the federal government loves giving out refunds because that's a way of acknowledging the fact that it has collected more money than it was entitled to. And it can use it for a variety of purposes. It could invest it. The federal government could invest it, and often does, but they won't return those investment earnings to us when they send the refund check. We'll just get the money back that was always ours. Well, withholding, when we select withholding allowances, this is a way for us to estimate. And hopefully we'll minimize the amount of refund and hopefully not have to pay in too much by having too little withheld. And we do this on Form W-4. A couple of methods that are used to calculate withholding, so this would be of particular interest to folks who work in payroll or may work in payroll one day. The percentage method, often this is used in computerized systems or applications accounting packages such as QuickBooks or Dynamics Great Plains. Also, there's a wage bracket method. Often smaller employers will use these tables. So this is found on page 1043. In the next video, I'll bring up these tables and we'll continue our conversation in Chapter 10.